that as worker productivity continues to improve, that is deflationary. So even if you have a growing economy, which could potentially be inflationary, if you have worker productivity gains, that is deflationary.
Banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Waikiki. We are on Oahu, a little family trip, and hopefully my audio is okay. Tide's coming in. We're about to grab some lunch. It's like 1:30 out here. Just completely not unplugging and not getting away from work. What else would you expect? But there have been moments. So there's obviously some inflation data coming out this week, some PCE, which matters to us, if we're looking at rates. Rates are still a good spot. I haven't even looked today since this morning. I think the 10-year Treasury is at 407. I haven't looked at the end of the market. But I wanted to talk, a little bit about the flow of money and some housing policies being worked on. I know there's a group led by the Mortgage Bankers Association that is continually meeting in D.C. to work on things. I think they're meeting with Treasury Secretary Scott DeSap. I don't know any other organization that's doing that. And, they call the shots, the administration. So you want to get policy done. Seems like in an election year, midterms, they're really excited to try and get some stuff done. So love to hear that. And I know Bob Brooksmith is really transparent and open at the NBA, talking about all the things they're working on. So I'm sure there'll be more to come there. Okay, so the flow of money, which, by the way, I hear from a lot of locals that it's very expensive to live here. I'm sure those of us that lend here know that. We have a branch in Honolulu that I'm going to go meet with tomorrow at noon and speak with 50 realtors and just, talk about PRMG and what we're all about and help support our team. It's really a great chance for ownership to get out there. I've never been to Oahu, so, when in Rome, right? Okay, so flow of money. So remember, there's stocks and bonds, right? That wasn't 6-7. Stocks and bonds. Money flows in and out either way. And last week we saw like $1 trillion in market cap evaporate from like Meta, Amazon, Google, Microsoft. And this morning, a lot of it came back. So, don't worry about the gyrations of the market. It's pretty normal stuff. I'm not a financial advisor. I'm not responsible for your losses, only your profits. But good businesses with good earnings continue, to have their prices bounce back. There's a lot of discussion about artificial intelligence, not just in our space, but in the hyperscaler space. So these companies that are spending $150 to $200 billion this year, as announced, where's the ROI? So there's a few old school CEOs out there that still remember it's about ROI. These are mortgage seasoned veterans, not tech bros or finance bros that like to conjure up things that don't actually produce revenue or profit. So, are these companies going to continue to have the same free cash flow as they hyperscale? Maybe eventually. I think we all agree that AI is going to have a massive return on investment. When, for who, how much will it cost? All unknown. So you see a bunch of software companies, getting hurt in the stock market because the word on the street is every single software can be written with vibe coding, using Anthropic's Claude, which, by the way, is in the process of potentially losing some of their Department of War contracts because they're being a little hesitant about using their software and AI in modeling that could kill people. And so they have the right to do that. And if they do that, ideals are peaceful and history is violent. And so we know that, humans are evil around the world and we have to go to war at times. And those decisions are way above my pay grade and I'm not justifying, one way or the other. But every company has their own, right to decide how they want to use their technology, just like we do in our business. Thank God we're just trying to put people in houses and not worry about, sending a drone to protect Americans or our interests or our assets around the world. Those some tough jobs. Speaking of the flow of money, if we attack Iran, you'll probably see a spike in oil prices, which on the CPI last week, on the core number, I think we're at 2.4% because oil and energy has been cheap. And it's been cheap for a while. It's not been volatile. So, they always say the core CPI and PCE numbers exclude the volatile things like food and energy. And so when you exclude that lower energy price, the core number, I believe, was 2.5. So 2.4 and 2.5, really good. Long term, is inflation going to rear its ugly head again? Maybe. I listened to a really good podcast. Every time the job report comes out, Kathy Wood from ARK Invest puts out a monthly debrief. And she's very, very smart, been in the market a long time. And she talks about worker productivity, that as worker productivity continues to improve, that is deflationary. So even if you have a growing economy, which could potentially be inflationary, if you have worker productivity gains, that is deflationary. So it's something to look at. We all know, the average CEO is saying that AI has already saving them 8 work hours a month with their use of AI. So that's ROI on AI already. And I think it's only going to get better. So we'll all continue to learn to use AI on our jobs, not to, replace people with AI. We all want to do more. We want to scale. So I think that's the right corporate mantra to use AI. Food inflation, that food part of the exclusion and core. We all know all the pandemic food stuff has mostly been coming down. Still high beef prices right now, but generally food has been coming down quite a bit. So that's a good thing for inflation, which is good for Fed rate cuts and low interest rates. So, jobs are weak right now. We all know the job market is weak and they all get revised. The numbers get revised down later. So, we just have to keep watching that stuff, especially these reports that come out. I know I usually go Monday, Thursday. It's Wednesday late. This may be the only video I do this week. But, I talk about one more thing. Americans 55 and older are holding 70% of our wealth, and they are responsible for 45% of spending in America, which our GDP is based on consumer spending. So that's a good thing. K-shaped economy. It's tough if you're not 55 and older, which I'm pushing 50, doing my part here. But I could tell you that if the economy stays strong and GDP holds up, that is a good thing. If worker productivity continues to gain. Wage inflation has also been gaining about 3% plus if you're still working. And with 163 million people working, it's still a very robust economy with a 4.3% unemployment rate. So things are looking good. We have not had a recession. We have an engineered soft landing, although we've had rolling recessions, obviously in housing and manufacturing and other areas. But we're in this sweet spot as we begin the spring purchase season. So let's go help people buy houses. There's plenty of people out there that want to buy houses. We just got to go hunt them down and serve them. So have a good one. I'll try and get back to you. One last little set of views. Little windy and rocky day. The snorkeling trip got canceled, so we're just hanging out. Cheers. Mahalo. Aloha. All the stuff.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.